The company being analyzed today is Prakash Pipes Limited. This company is a small cap company. The current market cap is around 795 crores. Price of one share 332. The book value per share 186 rupees. Book value is basically assets of a company minus liabilities of a company. Assets are what we own, liabilities are what we owe to others. So net assets is book value per share is 186 rupees. Return on equity or ROE is very nice 20%. Return on capital employed is 26.8%. So the aim of this segment is to look at the financials of this company. Okay, Prakash Pipes, look at the balance sheet of the company, look at the cash flows of the company and its future outlook and what it actually does. It's an intro to the business. So let's start with what the company actually does. Then we will cover revenue and all that within that segment only. So, what does this company actually do? Two things: PVC pipes and fittings and flexible packaging. Now, PVC is a material, okay? Polyvinyl chloride. It's a chemical compound, polyvinyl chloride, pipes. So, plastic pipes, all right? Form of plastic. So, PVC pipes and fittings, pipes like plastic pipes, plumbing pipes, pipes like that. Fittings are nothing complicated. Basically, you have one pipe. Let's say you have one pipe, you have another pipe. To connect these pipes like this, there will be a component, and that component is a fittings, and it goes along with pipes. So it considered as one segment here: PVC pipes and fittings. Flexible packaging, as the name suggests, we have packaging first of all to pack something, or product. It will be in a packet. A flexible packaging will be more specialized packaging, more customized packaging. Okay, that is flexible packaging. The company has two segments: flexible packaging and PVC pipes and fittings packaging. Before we move to the revenues of these two segments, flexible packaging is becoming bigger and bigger part of the business. So earlier PVC pipes and fittings was way bigger than the flexible packaging division, but now this company's flexible packaging division is becoming larger and larger. All right. So moving on, the company overview. They have a state-of-the-art plant at Kashipur, Uttarakhand. So their manufacturing facility is in Kashipur, Uttarakhand. Their pipes and fittings. They have a 60,000 tons per annum capacity of pipes and fittings. They are one of the top players in northern India. So their concentration, their market is North India. Okay. 500 plus dealers and distributors. 780 crores of revenue in fiscal year 2025. Okay, 780 crores is the revenue fiscal year 2025. Flexible packaging, the capacity is 26,400 tons per annum, and this capacity they're going to be increasing it to more than 30,000 this year. That is one of their goals, to expand flexible capacity expansion. Return equity 19%, positive cash flows. So the company's cash flow from operations are positive, and net debt free. There's a term here, net debt free. Net debt is total debt minus cash and cash equivalents. So when your cash and cash equivalents are more than your debt, more than your total debt, then the company is known as net debt free, net debt free. That was the company overview. So then we have the highlights. Now in fiscal year 2025, okay, PVC pipes contributed to 47% of revenue, flexible packaging contributed to 47% revenue, and PVC fittings contributed to 6% of revenue. Here we can see the revenue from 2021 to 2025, a CAGR of 13% over the last 4 years. Revenue of 780 crores in 2025, 2024 was 669 crores. 2023 revenue was actually higher than 2024, but profitability during 2024 was higher than 2023. So profit margins greatly improved in 2023. You can see the revenue has risen. EBITDA was 130 crores for fiscal year 2025, a growth of 20% over the last 4 years. Profit after tax for fiscal year 2025 was 83.1 crores, 23.5% growth rate over the last 4 years. This could include the COVID rebound. So after COVID, of course, earnings rose sharply, but we will see. 83 crores of net profit, profitable company, EBITDA 130 crores. And the last 2 quarters have actually not gone that well. EBITDA has declined and so has profit after tax. This is shown for quarter four fiscal 2025, but quarter one fiscal year 2026 has also not gone well, with sales having declined and expenses having risen. So we will look into it some other day. But overall, it seems over the past few years, the company has done really, really well in terms of annual figure. In terms of annual figures, the company seems to have done very well in profits, revenue, growth. Moving on, we have the different divisions. So first, we have the PVC pipes and fittings. The different numbers of pipes. We have water tanks. Okay, PVC fittings, like fittings, see fittings. You can connect different types of pipes to these fittings. Okay, casing pipes, we got PVC pipes, we got plumbing pipes, column pipes, etc. I think column pipes, these are used for construction. Maybe. Do tell in the comments below. Okay. 58% of the revenue comes from UP, that is Uttar Pradesh and Uttarakhand. Okay. 24% of revenue comes from Delhi NCR region. Haryana contributes 13%, while Punjab and Himachal Pradesh contribute to 5%. So North India is the revenue base for PVC pipes and fittings. Okay. This is for PVC pipes and fittings. It's written on the top. All right. Now they have an in-house fleet for in-house fleet of trucks for better logistics, extensive dealer network, and focus on penetrating new markets. But right now, North India concentrated. North India is their market. All right. Then product applications. Their products, PVC pipes and fittings, can be used for agriculture, they can be used for construction, and they can be used for water management. All right, water management, different places that don't have water need water, and pipes will be used to transfer that water, of course. Then we have the flexible packaging. What do they offer? They offer printing inks, brown PE films, okay, rotograver cylinders, flexible packaging laminates and prefabricated pouches. The basic thing is customized and specialized packaging solutions. That's what it is. Okay. Applications are across fast moving consumer goods like soaps, detergents, tea, coffee, confectionaries, food like biscuits, frozen foods, cereals, infrastructure, and others can be used in pharmaceuticals, cement, adhesives, fertilizers, motor oil, and lubricants. So, vast variety of uses, a wide variety of uses, wide variety of industries in which the company's products can be used in. Moving on, we go to the key clientele, key clients for the flexible packaging division. We got Dabur, we got Vadalal, we got Patanjali. Who else do we have? Haldiram, Bikaji, Cracks, Goated Cracks, Annapurna, Panchwati. All right, all right, okay. So number of clients, okay, key clients. Moving on, we see the sales volumes and other revenue and profit figures. So revenue we already saw, right, from 2021 to 2025. Let's see the EBITDA margin. EBITDA margin for fiscal year 2025 was 16.4%. Fiscal year 2024 was 18%. Before that, 14%, then 13%, and 12.7%. Profit after tax margin, let's take a look, 10.5%. All right, 10.5% for this year, 13.1% for fiscal 2024, and before that, lower. So we see there has been a rise. At least there has been a rise in EBITDA margins and profit margins. Okay. Here we have the earnings per share that have also increased. This year, earnings per share did go down for fiscal 2025. And again, quarter four of fiscal 2025 and quarter one fiscal year 2026 have not gone well for the company at all. Sales volumes. How much did they sell? Okay, PVC pipes and fittings, and flexible packaging. Both these volumes are in terms of million tons per annum. Million tons per annum or metric tons per annum? Okay, hold up. Million tons per annum or metric tons per annum? They have mentioned here that the capacity is in tons per annum. So I'm assuming that that means metric tons per annum at MTPA. That is my assumption. Okay, it's all right. So I'm assuming, but you can inform me on your own, okay? I'm just assuming. So sales volumes for, let's first cover pipes and fittings. 42,632 metric tons per annum. Fiscal 2024 was 41,000. 2023 was 37,000. So it seems that sales volumes have overall risen, especially for flexible packaging. Okay, flexible packaging, 15,548 metric tons per annum, a nice more than double increase, at least in the last 4 years. The sales volume seems to be increasing overall, though there are fluctuations here and there, but overall it seems to be increasing. Then, balance sheet highlights. We will look at the balance sheet just a bit later, but let's take a look at some balance sheet highlights. First, return on, let's cover, yes, let's cover current ratio. What is current ratio? Current assets on current liabilities. The bigger this ratio, better it shows the financial health of the company, okay? The balance sheet health of the company. So, current ratio has is around 5 to 1 and has been around 5 to 1 for the last, let's say, 3 years. Fiscal 2025, 2024, and 2023, 5 to 1, which is a really, really healthy ratio. So, on that, it seems it's solid. Total debt to equity. Debt compare as a fraction of equity is 0.09, extremely low. Okay. Inventory turnover days is the number of days it takes for inventory to be converted into revenue. So only 41 days. All right, pretty stable. Return on equity, 19%, reached to 26% in 2023 and 19% in 2025. Pretty stable. Probably went down because of what? Yeah, large number of assets, massive increase in assets without corresponding increase in liabilities, leading to a way higher equity than before. And the revenue, the profits not rising as fast as equity. All right. EBITDA upon net interest income. So this is interest coverage ratio. Okay, interest coverage ratio. So EBITDA is currently 18 times interest payments. This has seen a decline from 41 all the way to 18, but 18 is still very solid, nothing to be concerned about as far as I know. Uh, Even if I think EBITDA upon net interest being like 2 times or 3 times, that is considered pretty safe. 18 times, it's still very, very safe, in my opinion. Return on capital employed, pretty stable, bit of a downturn, 25% right now. It's still good figure, 25% is still good figure. Maybe it has gone down because again, profit growth has not really kept up with asset growth, and the cash and cash equivalents have also grown, but we will cover that. Return on assets, 15%, 14%, pretty stable, pretty all right. All right. Let's cover the key growth drivers for both the divisions. First, PVC pipes and fittings. What are the key growth drivers? First, Har Ghar Jal. Nice name. The union budget allocated 670 billion rupees for providing tap water connections to every rural household by 2028 under Jal Jeevan Mission. Okay, so union budget fiscal year 2025-2026, 670 billion rupees. This is around 67,000 crores. Basically, massive figure. And Pradhan Mantri Krishi Sinchai Yojana allocated 80 billion rupees to the Pradhan Mantri Krishi Sinchai Yojana. I believe basically it will help with water. Pradhan Mantri Awas Yojana and all right, 790 billion rupees. So it seems that these three key things, right? These three key government schemes will contribute to the PVC pipes industry growing by 10 to 12% in fiscal year 2026. So a lot of dependency on government schemes, a lot of dependency on government schemes for growth, at least for flexible packaging. Sorry, no, PVC pipes and fittings. My fault. And for flexible packaging, the key growth driver they have given for at least fiscal year 2026 is a growing population, better shelf life offered by flexible packaging, lightweight and convenient, okay, tool for brand building, because again, it's more customizable, flexible packaging that is. So your brand can be more unique when you use flexible packaging, rising organized retail chains and smaller household and nuclear families. Um, all right. So we saw the key growth drivers, we saw the profits, we saw the return on capital employed, and we saw the return on equity. Pretty stable. Last 2 years have been a bit iffy. So now let's look at the annual report. Okay. In the annual report, we will look at the growth estimates for the company. All right, the growth estimate of the company. First, PVC pipes and fittings. Now, under the black lines. Over the longer term, the PVC pipes and fittings market is anticipated to grow at a compound annual rate of 5.81% from 2024 to 2030, reaching a value of $8.05 billion. All right. So 5.81% is the industry growth rate projected till 2030 with a value of $8 billion by 2030 projected. One important thing for the PVC pipes and fittings division that PVC resin prices are 70 to 75% of total cost. So if these rise massively, then the costs will balloon for the PVC pipes and fittings division. Then coming to the growth drivers, no, sorry, the outlook. Yes, the outlook for flexible packaging. All right. Uh, yes, flexible packaging market in India from 2024 to 2028. Okay, reports forecast a market expansion of $15.6 billion, a market expansion, okay, driven by FMCG sector with a growth of 12.7%. 12.7%. So expansion by nearly $15 billion, the flexible packaging division. Sorry, the total, wait, all right, okay, market expansion of $15.6 billion, growth rate 12.7%. So flexible packaging division, the flexible packaging industry, forecasted growth rate of the entire industry 12.7% till 2028, and PVC pipes and fittings forecast is 5.8% till 2030. So we looked at all this. Now let's look at the balance sheet. Finally, balance sheet. Yes. Here we have the balance sheet. I think nothing much to see here. The only thing I want to show, okay, this is for fiscal year 2024 because I can't find the latest annual report. Uh, Only thing I want to show here is cash and cash equivalents. All these numbers are in lakhs. All these numbers are in lakhs. So they have a lot of cash and cash equivalents. 180 crores as of fiscal year 2024. Yes, 180 crores of cash and cash equivalents as of fiscal year 2024. And I think that's all I wanted to show. Yeah, that's all I want to show. A few more tidbits we can see. This is from screener.com. Now, under the balance sheet, if you go to the balance sheet for other assets, all right, they are showing That for cash and cash equivalents. Okay, you see cash and cash equivalents. Let's go to the latest figure down here. For fiscal year 2025, they are showing cash and cash equivalents of 257 crores. Last year they showed 216 crores. The numbers don't match up, but it seems basically the company has a massive amount of cash, especially for its size, like around 200 crores cash and cash equivalents. That's pretty good. The last 2 quarters have not been good for the company. Let me just show how that is. Okay. Now the blue lines, the blue boxes, these are the sales figures. The green lines, okay, the green lines are net profit margins, and the yellow lines are operating margins. Okay, operating profit margins. So here you can see, okay, March 2024 to September 2024, okay, operating profit margins of 15%, right? Net profit margins of 12%. If you want to go before that, right? If you want to just see before that, uh, yeah, they have risen substantially. They have risen substantially. And if you want to go even before that, you can see there is a stability period, a stable period, okay? 7% to 8% are the net profit margins. OPM or operating profit margins are 13% somewhere then. In the last 2 quarters, I don't know what exactly happened. This is something that has puzzled me. Sales growth has stalled. Net profit margins have stalled to 5%. Operating profit margin have gone down to 8%. This has been a bit confusing. Last 2 quarters, especially just a sudden decline in margins. Now they said that, okay, first of all, this could be due to monsoons, especially this. The June one could be due to monsoons. They did mention that PVC prices are a bit subdued. So that's why that's impacting their profitability. PVC prices being subdued, which can mean that the pricing of the products are a bit subdued. That's why, but this was a pretty bad, unexpected result. And I don't know the reason behind it, the exact reason. And if I do, I will tell you. So that is PVC Pipes and Fitting. So sorry, that is Prakash Pipes Limited, a company with two different segments. Both have shown good sales volume growth. Last 2 quarters have not been good. Net profit margins overall 10%. EBITDA margins 16-ish percentage. EBITDA margins overall, like annually figure speaking, the company has generated good cash flows. One more thing I forgot to mention, okay? These are the cash flows of the company. Cash flow from operating activity. Let me just show it. Yeah, cash flow from operating activity. 2019, 20 crores. 2020, 14 crores. 2021, 31 crores, 30 crores. 2022, 51 crores. 2023, a dip to 42 crores. 2024, 120 crores. Now a dip to 73 crores. So it dips, it rises, it dips and rises, whatever. But main thing to see is that pretty good cash flows. All right. The company doesn't have a lot of debt, which leads to very low interest payments, as in here. Yeah, you have interest, you can pay attention to here. All right. These are for different years. Let me just, is it visible? Yeah, here. So let's pay attention to interest figures and the year. Only 2 crores of interest for 2022-23. Okay. We move here. Okay. Only 4 crores of interest for 2024. Only 7 crores of interest for 2025. Okay. 7 crores of interest for 2025. So company is very balance sheet healthy. One thing about the company, it has a lot of cash, not a lot of debt. It is expanding, especially with a lot of focus on the flexible packaging division. They are they say they are focusing on more exports and value adding high margin orders for the flexible packaging division. And a lot of their focus is on the flexible packaging division as it becomes a larger and larger percentage of revenue, almost being equal now to PVC pipes and fittings. PVC almost equal. And that's it. That is Prakash Pipes and Fittings. If I ever find what happened in the last 2 quarters, a more definite answer, I will obviously tell. Good cash flows, actually pretty good cash flow company. Very low interest, balance sheet healthy, already said that. Stable, stable EBITDA margins and all that. So that's it. Hope you have a nice day.